Hey, welcome all. This is Sanjay Mehta, founder and partner at 100x.vc. Uh, this is Inc42 and Dell VC Roundtable on decoding the startup funding landscape and trends. Uh, in the first quarter of 2021, we saw Indian startups raise almost $2.7 billion from 268 funding deals. However, the funding amount was 12% lower than the quarterly average, which we had seen across from 2017 to 2020 of almost $3.1 billion. Fintech has been the most preferred startup sector in Q1 of 2021. Compared to the previous quarter, Q4 of 2020, the number of funding deals was 26% higher. It was also the top startup sector in 2020. From a macro perspective, the overall adoption of internet based products and services was no longer limited to Bangalore, Delhi, NCR, Mumbai, or the top three startup hubs, but the change in consumption pattern of Indian public has thrown open several opportunities for tech-enabled product and services, and they are able to expand their user base beyond digital borders of top three startup hubs. Let me now introduce speakers of the roundtable. Please uh, all the speakers one by one, when I'm introducing, say one liners about your fund and what sectors excite you the most. Let me just first start across with Vikram at Ivy Cap Ventures. Vikram Gupta.
Hi, Sanjay, and thanks a lot for having me on the show. I'm Vikram Gupta, founder and managing partner at IBK Ventures. We manage about $200 million. We primarily invest in Series A, Series B, mostly tech companies across sectors, whether it's consumer tech, edu-tech, health tech, B2B SaaS, agri-tech, so across the sectors.
Awesome. Thank you so much. And if you can just spare 60 seconds on, what are the sectors you are most excited about in 2021?
We are seeing a lot of interest in health tech, edu-tech, and even fintech. So these are the sectors that we're quite excited about.
Awesome. Let me get Sid Talwar, Siddharth Talwar, partner at Lightbox Ventures. Sid, can you introduce
Hi, I'm
your
Sid.
fund and 60 seconds on trends? What are the sectors you feel are hot or you are looking at?
I'm Sid. I'm the co-founder and partner at Lightbox. We are a consumer-based venture capital fund based in India, investing in India. I thought about trends because you guys had written something, and I thought about what I should say, but I don't think we're following any real trends here. I think we're investing in consumer. I don't think anything has really changed for us. And in that realm, I like all the sectors that Vikram also just mentioned. But I think to a large extent, we're very eager to see how D2C kind of pans out and continues to pan out in India. We're actually very excited to see financial services, though I think that's very broad and could mean anything. But we're excited to kind of figure out what we get excited with within financial services in India.
Awesome. Thanks, Sid. Let me just welcome across Venkat Sitaraman, General Manager and Geo Head, Dell Technologies.
Thanks, Sanjay. Good evening, all. It's great to be here. Thanks, Inc42, for having this wonderful session. Uh, you know, I lead the business for startups as a vertical in India. Um, I'm excited to be here today to see how technology can be a catalyst in businesses. Uh, I just heard Vikram said and all of you talk about all the techs. So we are there, the techs, you know, the lead tech player, and happy to associate and engage with you and looking forward for a wonderful session.
Thank you so much, Venkat. Can we have Gaurav from Prime Venture Partners?
Hi, Sanjay. Good evening, everyone. Pleasure to be here. So we at Prime invest primarily in early stage from seed to Series A. And again, we are sector agnostic, but we we primarily invest in tech product first companies. In terms of sectors that we're excited about, so SaaS is one area where we're looking forward to this year and the coming year. Fintech is another area where we have been bullish all throughout. And within fintech, I think insurance is something that we're looking forward to in the coming year.
Awesome. Thank you. Thank you, Gaurav. Can I request Karan Mola to join? Hey, Karan, if you can introduce your fund and talk about sectors of your interest.
Sure. No. Thank you, Sanjay, and thanks to Inc42 as well for the session. So I'm a partner at Chirate Ventures. We are, like many others on this panel, a tech-focused venture capital fund. We manage about close to 900 million. We've invested in about 100 companies across all areas of tech. Because we invest in all areas of tech, nothing stands out in terms of one sector, but something that we've seen more relevant over the last 12 months or so has been certainly around enterprise tech, whether it's SaaS applications, overall B2B platforms. We've always invested on the consumer side, and we see a new wave of consumer-facing platforms coming up. Fintech, both across lending, insurance, as well as network plays, something that we've invested quite heavily across. So looking forward to similar trends, as well as in new areas such as agri and deep tech, over the coming few months.
Hey, thank you, Karan. Thanks. Last, Anup Jain from Orias Venture Partners. Anup, if you can, Anup, introduce the fund and talk about the sector trends.
Yes, thank you, Sanjay, and great to be here. And apologies for a slight delay. Appreciate everybody's patience. So I'm a partner with Orias Venture Partners. We've been known for early stage investing. We continue to do that. We've added on growth stage with our companies as well as pre-IPO companies in the tech space to our portfolio. And our latest company announcement of PharmEasy going to IPO is a big sort of privilege for us, in the sector, sort of signifying liquidity exits and sort of recognition by the public market, so to speak. So our sectors of interest are across different spaces, but agriculture, education, mobility, and gaming and new media entertainment is sectors that find our favor quite a bit, in the profile of the partners also sort of reflects that in terms of their past operational experience. Yeah.
Awesome. Thank you so much for being on this panel. And let me start with you, Anup. You spoke about the IPO stuff with PharmEasy. I mean, there is line of IPO which is announced across from the startup side of it. Do you think retail equity investors in India would understand startup and invest in startup IPOs? What's your view on the startup IPO story which is playing out, and there's huge momentum in the market?
So I think, Sanjay, I think all of us, would agree. We always looked for exits and liquidity in the Indian startup ecosystem. Very often we were questioned as to how those will happen, and whether the only route would be private investors, large late-stage funds kind of buying these companies out. But today, this has come as a heartening piece of news that late-stage companies can now progress towards public markets. SEBI has also introduced an IGP platform to accelerate this. And you're indeed right that companies from several of the early stages back 10 years ago are now finding mentions where they're headed towards successful IPOs. Hopefully, where definitely retail investors now are taking a very close look at it. Earlier, it was only HNIs and family offices and institutionals and foreign institutions, of course, who always allocated bigger and bigger monies to it. But today we are seeing that secular interest across income classes, across wealth classes, and I have no doubt that this is the beginning of a trend, because this was niche earlier in terms of adoption, but post the pandemic, of course, all of us have seen that we could not have survived this even in our personal lives without having digital adoption in a big way for literally everything, every aspect of our life.
I'm with
So
you.
I think it was, yeah.
Cool. Vikram, what is your view? Do you think retail equity investor is smart enough to invest in startups?
I mean, we've seen this story evolve over the last 10 years. And I remember when we started Ivy Cap, startup was a bad word in terms from an investor's perspective. The startup meant, huge amount of risk. You're going to lose money most likely. And especially when we're talking to institutional investors. And I think over time, what we've seen, especially after the Prime Minister launched this entire startup India, Stand Up India movement, ever since then, we've seen a substantial focus. And of course, the media has been always talking about startups, and there's a lot of discussions around all these rounds which are happening, the unicorns. Even this year, we're just in the 6th month of the year, we already seen, I think, more than 15 unicorns already. I think people are generally curious, and they've been trying to get into this startup ecosystem. They're looking for opportunities. Of course, a large number of angel networks around. People have been participating. I think this entire IPO stories which we are seeing now, I think retail investors are now seeing that as an opportunity to get in. So I think it's from a timing perspective, I think this is a perfect time for the retail
Okay.
investor to take this opportunity.
This question I'll just run through all of you. So next, Sid, what's your view? Would retail equity investors lap up startup IPOs?
I absolutely think so. I think that the importance of understanding business models is to some extent important, but I doubt Indian retail investors understand the business models of most of the businesses that they invest in the public markets. I think that FIIs are coming in like no one's business into the market right now, and I think more people that have been investing in ADRs are coming in here, getting registered and starting to invest because of companies like Zomato, companies like Policy Bazaar, maybe Paytm going forward in their IPOs, their pre-IPOs. I think there's going to be a tremendous influx of analysts reporting on these stocks. There's going to be a lot of media interest in these stocks, and that's going to drive retail investors to go further in bringing these stocks into their portfolio, whether they are loss-making businesses or they don't understand what these businesses truly do or how they make money, or don't understand the true lifetime the roadmap of these businesses. They will come in, and a lot of it might have to do with FOMO. But at the end of the day, it'll catch like fire, I think, especially if they recognize the name.
Okay, cool. Karan, going next, what's your view on the retail equity investors? Would they lap up IPOs? Karan?
Yeah. I think you'd find it very difficult to get hold of somebody who disagrees, to be honest. And I think partly is some of the points that Sid covered. But I think equally importantly is the fact that as an industry, we've always heard this thing from people outside of the country that where are the large IPOs in tech? And ultimately, when you're looking at, especially on the consumer-facing businesses, like the Zomatos and Paytms and Policy Bazaar, these are names that people are familiar with. These are names that people have habituated towards. They've created new categories in many respects. So retail investors, to the best of my knowledge at least, do find comfort in stocks that they're also comfortable using. And that's why you see a lot of the bellwethers could continue to perform for decades. But I think it's also a question of just the scarcity value, whether it's on the institutional side, and we think that there's going to be a very, very large pool of capital that's going to gravitate towards those companies, because of also how I think liquidity is in the global markets. But I think there is a very high level of appetite for these kinds of stocks. and retail investors aren't going to be any different. So I think it's the beginning of a secular trend. It's not a 2021 or 2022 phenomena. It's going to continue for a period of time because you've got 30, 40 companies which will go public in the next 5 years.
Understood. Lastly, Gaurav, your view on this whole startup IPO story.
Yeah.
Where do you think retail equity investors, do you see anything different than what others said?
Yeah, so I agree with most of the points, though I have a slight different point of view here. So we have a traditional set of investors, old school investors, right? For them, it may be a little difficult to comprehend and understand the business models of the new age tech startups, right? People who rely more on cash flows and profits. But then we've also seen in the last few years, new age retail investors, right, who kind of understand these business models well, who can relate to these products and services, right? So we'll definitely see a lot of pull from these new age investors, right? And my belief is that for old school investors, it will take maybe a couple of IPO cycles to get used to these new business models and the way to evaluate these new IPOs.
Gotcha. Hey, thank you all for this initial first set of question. Venkat, coming to you, while all of us are very bullish about, the startup IPOs happening, Dell is a tech giant, right? And you have been omnipresent everywhere. Where do you see Dell helping on the digital adoption for startups? What kind of challenges, hurdles, solutions? How are you helping this momentum grow across? And what's your view on that, Venkat?
That's a great question, Sanjay, and thanks for bringing the tech aspect in. I think first, we have a big presence in India. We cater to customers across all segments. One of the center focus has been startups over the last, I would say, 3 to 4 years, and we have put a lot of investments in the sense. First, resources from Dell who talk to these tech companies and tell them that we are the catalyst and we are here behind to help you build the techno or help you lay the technology foundation. It all starts with infrastructure, right? As we are doing a live stream call here, it all starts with the basic infrastructure, and you would understand what I'm referring to, and that's where we play a very important role. This cuts across all categories of tech, starting from fintech to agri-tech to enterprise tech to SaaS-based customers to all the forms and shapes. There is no one size fits all. That's been our approach. One of the uniqueness that we have brought in this industry is the ability to help customers customize what they want. We custom build business models for them, and we ship these technology, call it starting from devices to everything that gets into the data center and so on and so forth on a customized model. Once this is in place, this, what we call is it kind of lays a foundation for a digital journey, right? Most of these investments that you're talking about, or the upcoming cons and the future cons, are relying on technology as a catalyst to reach their customers. And when they do that, you need to have a robust technology infrastructure solution provider with you. And that's where we play a significant role, and we
Understood.
believe we add a lot of value to
Sure.
this engagement.
Thanks, Venkat. Hey, Sid, coming to you, while we talk about all the tech stuff, you spoke about D2C brands, and that was like uh, great interest. A lot of D2C brands are getting created, tractions. What took traditional brands to build for 10, 15 years, D2C brands are creating in 2 years, 3 years. What's your view? What is that underlying momentum? How are they building it?
I think a lot of things are coming into place for as far as infrastructure is concerned first. So access is there, and I think a lot of brands could have grown much faster, much earlier, based on the quality of the brands that were being created by amazing founders in previous years that maybe didn't work out as well because the access wasn't there. But today that is there, and So that's one. Number two, the quality of entrepreneurs that are coming and trying to build businesses are at a caliber we've never seen. Not because earlier founders weren't brilliant, but because the exposure and experience that you're getting today, and the support and the advice you're getting today, is superb. And so that's just elevating the standard of founders that are starting these brands out. The third thing is, the availability of capital today is at its peak, and especially for early rounds. And so your ability to be able to create faster is something that's very visible. And finally, I think there is momentum. We've never, a few years ago, I don't think we would have imagined a D2C brand, or a startup brand generating $70 million ARR, $100 million ARR. It was unheard of. And we hoped that would happen one day, but you kind of built on that hope. Today, it's a reality. You're seeing, companies that are going public, that are, at multi-billion dollar valuations, that are D2C. And that gives hope to any founder saying, yeah, it's possible. It gives hope to investors saying, I don't have to invest in a marketplace in order, or a delivery company for me to be able to make tons of money. I can make money here, so I will invest more time and effort on D2C. And I think this is a revival of sorts. It's the first time in, I don't know, 60, 70, 80 years that such a proliferation of new brands are entering our market and giving that choice to a population that has immediate access to it. The only other time that happened was at the rise of Kirana stores and all the FMCGs, all of them international, not Indian, came in and provided this. So I think it's a very exciting time, and there is no one brand that can't make it a multi-billion dollar industry.
Awesome. Anup, you guys are also very interested in, and you got a portfolio with D2C brands. What's your view on the D2C brands which are emerging across? Anup?
Yes, so Sanjay, pretty much the same as I think Sid's, and I'm sure the views won't differ across. It's all about segmentation. India has been, sort of deprived of segmented brands which were directly addressing the unique insights, habits, and preferences of those segments. There was a limited choice of multinational driven brands at high prices, premium prices, and they were sort of 3-star brands at 3-star prices, which is cheap for cheap. What's coming right now is 5-star D2C brands at 3 and 4-star prices, right? And that's opening up a segment after segment. The insights and consumer needs are being studied that much more closely by these brands. So products are being made, content is being made, and communities are being made around these brands of or segments of consumers on the internet, whether it's through Instagram or other social platforms, and thus you don't have to jump through hoops of retail channels. You don't have to jump through hoops of marketing channels to be able to hear back from the consumer as well. There is a one-on-one conversation taking place. There is a one-on-one handshake in terms of transaction taking place. You read something, you like it, you can try it, you can buy it. You're directly doing that from the company, no less than that. And you're leaving a footprint behind which can convert itself into data, and that data is analyzed for further, making products and then reaching out to you more effectively. I remember as an FMCG marketer, in the earlier era, we always used to have to rely on intermediaries for everything. So there was media intermediaries, market research intermediaries, retail intermediaries. We never had enough of a grip on the consumer. D2C today is just broken all the shackles, taken care of the margins in that sense as well. And there's a whole revolution sitting out there. We of course have Country Delight, which started off with fresh and pure dairy, and now it's moved into protein-rich eggs, no hormones, no antibiotics, directly delivered to to the consumer's house. Bread, again, no artificial colors, no preservatives over there, and then moved into fruits and vegetables. Again, delivered through the same pipe. So it's a classic example of how staples can be delivered as well.
Sure, that's a great example. Vikram, coming to you, what's your view on vertical marketplaces? You are investor in Purple. What kind of marketplaces will emerge across, Vikram? Vertical marketplace, does it have a play no longer, or Amazon and Flipkarts are going to take over?
Yeah, that's a very good question. In fact, when we were looking at Purple, there was already Nika in the market, and there were, of course, players like Myntra, Amazon, and others. And this question, bothered us even at that time, 2014-15, when we were evaluating this investment. And I think, given the size of the market we have, so we're talking about 1.4 billion people, and I think Sid talked about a very important point, is the access. The access is only increasing. We are seeing a very large penetration into tier 2, tier 3 towns and rural markets. Newer customer segments are emerging, as Anup said. This is all about building the right customer segments. And India is a mix of large markets of different needs and different requirements, and you can always find opportunities creating new kinds of horizontals and verticals. And I think any segment which is more than $10 billion in size, you could actually create an opportunity, building very specific kind of horizontal or vertical. In fact, if you look at Biryani by Kilo, which is one of our investments, when we looked at it initially, I was kind of not sure whether you could actually create such a large business. Can you actually build $1 billion business just selling biryani? Now, it's amazing. The largest selling food item on Swiggy or Zomato is actually biryani. And you could actually even create a horizontal around biryani and actually add a lot more food items to that. Once you established a platform, you have, let's say, 500 cloud kitchens around the country. It becomes a platform, so you can actually add.
Absolutely.
So it depends on what really you're going after, and what business you're building around.
Karan, your view on vertical marketplaces. What's your view on future of vertical marketplaces? Does a marketplace today hold true, Karan?
So Sanjay, we've always been big believers here. I think from the time Myntra became an e-commerce company, I think the path forward in that segment for those models was very, very clear to us. So Myntra led us to invest in companies like Lenskart and FirstCry and Zivame, as well as a few others. But these are, again, very, very large companies. They're the largest in their categories across India today. They're the largest retailers in India today in their categories. So I think that question has been answered. And there were a few things which, even back in 2011, 2012, when we first invested, kind of made sense to us. It took some time to play out depending on the category. One was obviously to be able to own a vertical. You need to literally own everything. You need to be completely integrated, including manufacturing. That you cannot do on day one, but you have to build capabilities so that over time you're able to actually do that. And today, at least, all these companies have that know-how. The second was how the importance of an omni-channel play would work. And not every company has to go omni-channel, but at least we felt for categories where product discovery was a challenge, where quality was always a question mark for online users, and then also to reach different kinds of users to begin with, you would need to have some sort of an omni-channel play. You needed to build that, and over time it became a very differentiated moat versus a Flipkart or an Amazon, and that's why none of those have been able to build categories. Those categories, and I mean there are many other things, including supply chain, etc. But
Understood.
Over time, I think you get to see that vertical marketplaces, if they're actually properly integrated, they own everything, can become large brands.
Sure.
Purple is a great example. Obviously, Nika has its own, that's how you get disproportionate market share and disproportionate value. These didn't start out as D2C brands, but they're effectively D2C brands today.
Gotcha. Gaurav, coming to you, fintech has been the most favored sector. Do you see that momentum will continue with fintech? Any new stuff, or now it's like done and dusted? No more fintechs, new stuff emerging. We have covered most of it.
No, fintech has been pretty active in terms of overall sector activity for the last few years, and we see that trend to continue going forward as well. Whether we are talking about consumer side of fintech or SME side of fintech or B2B side of fintech, right? So the way we see fintech right now is there are broadly three categories, right? One is the poorly served segment, second is a underserved segment, and the third is the segment which has not been served yet, right? So till now, if we look at the fintech innovation that we've seen, it's mostly in the poorly served segment, right, where a lot of innovation has happened, and we're seeing that gradually trickling down to the underserved segment, right? But there is a large segment of customers which is still not served at all, right? People are not still thinking about reaching out to that segment of customers, whether it is in B2B or B2C, right? So we definitely see fintech as a broad sector will keep growing in the coming years as well. And again, within fintech, I spoke in the beginning of the call as well, insurance was one sector which was still, I'd say, untapped from startup activity point of view till the last few years back. Most of the innovation that we saw in the insurance space happened mostly on the distribution side, right? But now as IRDA is taking an active role in bringing innovation in insurance, we're seeing a lot of activity happening even on product creation side. Of course, distribution is one area where people are working. B2B side of things, claims management, etc. Right? So fintech, so that is on the insurance side. Lending side, as I said, there is a large segment which is still underserved and even not served yet, right? So we do see that fintech will keep growing in the coming years as well. Sanjay, you're on mute. Sorry.
I think you're still on mute.
Okay, got you. Thanks. Hey, Venkat, coming to you, remote working has been like a norm, right? How does Dell help in terms of this remote working challenges, what we see across? Is there any innovation, new trends which you are seeing in remote working which can help us discover investment trends?
Absolutely. I think it's very, very apt from the current environment. Work is happening uh, anywhere and, of course, more from home now. We ourselves have seen good amount of dividends running work from home, be it engaging with our customers or partners. Now, the second part of your question, how does it help today and what innovations are coming? I think it's important to create a seamless experience. And there, we recommend creating workspaces. Workspaces will have a combination of not just the device, connectivity, and the VPN and the collaboration tools, etc. It's also a cultural, call it trend that needs to be set, and companies need to take, or businesses need to put those policies and frameworks in place. In doing so, today, I think that is the biggest driver of the innovation, the workspace that is getting set up, where you allow users to access from any device anywhere. It just need not be a laptop, it can be on your phone or multiple devices or many devices at one time. To be able to get that access to technology wherever you are is the biggest innovation that is happening, and there Dell is helping bring a variety of form factors, a variety of displays, a variety of security tools, so that you can have a very secured, seamless access call it defining engagement or a business customer experience. So this is something that is we believe is here to stay, and this will only evolve from where we are. This is a very, very interesting and a great opportunity that today Dell sees as something that we can help all the technology companies.
So Vikram, if you can help us understand, in terms of last 2 years, a lot of disruption has happened. Is there any change in the way you evaluate now deals? Is there new way of looking at deals to invest? What's your new updated investment thesis? If you can share with audience, that would be great in terms of how do you evaluate deals now?
Yeah, you're absolutely right. Especially last 15 months, ever since lockdown started, I think we've seen a change in lots of things, including how the consumer is buying and how the entrepreneurs have matured. And I think Sid mentioned about the maturity levels of entrepreneurs. And I think the level of maturity which has come in the last 15 months, specifically after having gone through near death experiences in many cases, and then actually coming up from there, it has changed the way the entrepreneurs are looking how to conserve capital, how to become more capital efficient, and also their outlook towards technology and leveraging technology to market their products or to reach out to the customers. I think understanding of these fundamental changes in the market is one of the key factors that we are looking for.
So
Uh,
you evaluate more startups now on the capital use and capital efficiencies. That's what the changes happened.
Yeah, we've been doing this for a period of time, but now I think maturity levels of entrepreneurs has become even more important. How they're actually looking at using their capital initially. Like for example, you've seen even D2C businesses like Bluestone, for example. Of course, they've done a lot of investment in brand building initially because it's pure D2C or sorry, the pure online business. And last 2 years, they actually set up stores. A jewelry business during COVID times, actually setting up a large number of stores and actually becoming profitable in offline stores during COVID times is something which is very unique. Uh, so we see this online offline kind of a mix also emerging during this time. So the entrepreneur mindset in terms of approaching the markets, leveraging technology and capital efficiency mindset of it.
Sure. Karan, any change in your investment thesis, how you evaluate deals at Chirate?
So look, I think for us, I mean, we come in pretty early. The largest part of any sort of diligence that you would do would have been and sort of still is on the founders. So I think there's two things that we've tried to do at least to get to a point where we can drive comfort. I think one is just spending a lot more time with founders and a lot more. I think the velocity of that time also becomes much higher. And then getting people within the team to sort of to meet founders before we take a call. But I think ultimately the one thing which has kind of stayed constant over the last 12, 15 odd months is the way founders have sort of hustled in their businesses based on what they've seen. That becomes very obvious in the first, maybe not in the first necessarily, but in the second or third conversations. When you see the kind of choices that they've had to make and understanding how those choices relate to what the impact on that's had on the business. I think correlating these 2-3 things, which I don't think one didn't need to do previously. I think that's been a very important part of how we think about this, and just looking at the unique insights that they're being able to draw from their businesses. Right? I think you're just spending a lot more time on that. It always helps if your founders are coming through references, people that you know. I think that adds a little bit more comfort, but ultimately, I think you still have to be able to do that level of work and probably spend a lot more time on primary research, talking to customers, talking to users, talking to partners, beyond the desk work that one used to do pre-2020.
Understood. That's great. Sid, coming to you, the market is heating up. There are a lot of competition on the deal side. Uh, you know, the founders are having multiple term sheets. There has been crazy stories floating around. Have you seen any momentum in your side of it where deals are really getting competitive, or any views for you in terms of how things are shaping up in coming months and years in terms of founders getting highly overvalued or valuations going up and down and competition with other investors?
So first of all, I think we have always been, as a country, very small in terms of the number of funds that invest in the country and the amount of capital that the startups in the country have access to. I think that's opening up, and that's great to see, but I think we have a very long way to go. I think more venture funds will start in the country. I think more international funds will start investing at an earlier and earlier stage, as we're seeing now. I think family offices will come up. I think corporate VCs, hopefully like Venkat and others, will invest more and more into the sector. So I think this is the start of a lot more capital coming in, and the opportunity for investee businesses and startups to gain access to capital they wouldn't otherwise have for the areas that they're trying to build businesses in. There will be areas where people will compete, but there have been areas where people have been building incredible businesses that I've seen myself, but don't invest in because it's not what we specialize in. And so those guys aren't able to scale their businesses or build the businesses they want to in the way they want to, because they don't have access to capital. So I think this is just the beginning. And I hope that, we're able to see significant leaps in the next few years of capital coming in. And if that means that the people on this call, including myself, compete more for deals that they really want, I think that's one. I think more than money, I think what I hope happens is that we have a mindset change on our shareholders agreements and the kind of terms that we put down on our entrepreneurs that we've been able to use so far. But as more and more competition comes in, I think that will change, and I think that'll be a very interesting change and a needed change going forward. So I think this is just the beginning. This is just the beginning.
No, you made a great point. I think shareholder agreements have been quite a lot in discussions. And in 2019, when we launched 100x.vc, we started with iSafe usage in India and try to make it a de facto seed stage, first check kind of investments. Coming to you, Anup, you recently closed a fund. Congratulations. And, where do you see domestic venture capital kind of stuff? Do you see family offices participating? What's your view on the trend with domestic capital, as Sid mentioned, which is coming up kind of stuff? Anup?
Yep. Yeah, Sanjay, thanks for that. It's greatly encouraging. We received a lot of support from the IVCA and members. Many of them are here in our journey, and we'll continue to do that. On this as an asset class, I think we've truly come a long way. I remember the last 3 years was a lot about telling investors, hey, this is going to happen. And they said, well, show me the money, right? And it reminds me of a movie, and I'm sure everybody remembers that famous dialogue. And it was all linked to liquidity and exits, and when am I going to see cash coming back? I think today, as we sit in 2021, 22, especially with IPOs and strategic exits, a lot of the first generation tech investors amongst UHNIs and family offices, about 100 plus of them who invested, or let's call it dabble in some of this investing based on trust and relationships, will now actually see money cycling back to them. Now, once that happens, that is going to start a flood, according to me, because that is going to make some sound. And that sound will be heard wide enough. Already the public markets will lay any doubts to rest whether these IPOs can be supported. We saw Nazara list itself this year, and we'll see what happens in the next 12 months. It's very crucial. So many of the funds which were raised in 2013, 14, and 15 will see payback cycles on the domestic VC side, and therefore we will see a momentum that's not been seen before. And just to quote some of these reports, there are about 10,000 UHNIs which are supposed to invest about $30 billion, according to a recent report, by 2024. And a lot of it will be domestic. money which is coming in. I'm already seeing a lot of momentum during our current fundraise.
Awesome. Gaurav, coming to you, what are your views on current exit opportunities? We spoke about IPO, leaving IPO aside. Where do you see exits are happening in the VC world?
So I think, exits have started happening in the, in the last couple of years, right? And we see the trend only growing going forward, right? Every late stage funding announcement that we see these days has one marquee late stage VC large fund who was not participating earlier in the Indian ecosystem, right? We see one new name in almost every new deal that happens, right? So for now, I feel a lot of exits will be driven by late stage investors coming in Series D, E, F rounds, right? So that is one thing that will definitely happen. IPO, I think, will also have a positive impact, right? Post IPO successes will kind of establish India as a more dominant play for the overall tech and startup ecosystem. So that'll again drive in a lot more institutional capitals from outside India, which is not coming earlier, right? So I think IPO definitely is one route, but outside of that, we do see a lot of late stage funds coming in and giving exits to early stage funds like ourselves.
Awesome. Last year, we saw across a good amount of interest from corporate like Reliance acquiring startups. This year, we have seen Tata taking a lead on acquiring startups. You know, anybody who has a view on this, share across corporate acquiring, startups. While Farmeasy acquired a corporate, that's a different story. We can come to that, but corporate like Reliance and Tata acquiring startups. What's your view on that? Sid, Vikram, anybody would like to take?
I can go first, maybe. We actually, in the month of March itself, we had 3 exits. We returned about $80 million across these three exits. And one of them was actually Pharma Rack, which was actually sold to a consortium of Indian pharma companies, including Sun Pharma, Cadila. We actually came together and created an entity to buy out this company. And I think you're going to see this more and more. And you were referring to Reliance, and Reliance has actually started doing this more and more. We've seen Reliance acquiring companies like Zivame and there are few other that they're doing, which is actually a good opportunity. But in our case, in case of Purple, which was a significantly large exit for us, it was Sequoia and World Invest primarily driving the exit for us. But yeah, I think I agree that there's more and more of this activity that we'll see going forward. With the activities around exits increasing significantly.
Sid, do you have any view on that exit stories of Tata, Reliance?
Yeah, so we've sold a company to Reliance, and Tata is looking at purchasing a company, and I think more and more this is the way it needs to go, right? Traditional businesses or older businesses are going to want to purchase young, innovative companies, and this happens in every country. And I think it's. I think the question is really going to be how these startups coexist within the infrastructure of these companies. And I'm sure we'll see lots of other corporate houses starting to buy businesses from the venture ecosystem, the startup ecosystem. The next question is going to be, how do they survive? What happens when they're in that entity, in that institution? And that will determine not whether these guys want to start buying more companies in the startup ecosystem. It's gonna determine whether the startup ecosystem wants to sell themselves to these guys. Tanishq's acquisition of Carrot Lane, I think, is a great example. Another business, just like Vikram mentioned, Bluestone, another business that's their offline presence has ballooned, and they're doing incredible business. Pre-COVID, post-COVID, and whatever it may be. And I think that's a great example of a corporate house buying a startup and making it perhaps even better than it was prior to being bought. So I think there are great examples out there, but I think the larger The larger question is still yet to be answered, but probably will be answered very quickly. And I think the Tata the roadmap will give us a lot of insight and a lot of learning on hopefully how to buy businesses. Hopefully they do it right, and it teaches other businesses in India how to nurture these companies going forward.
No, absolutely, you're right. Walmart acquiring Flipkart shook up everyone within the Indian corporates. Venkat, coming to you, you know,
Sanjay, sorry,
yeah,
if
go
I can
ahead.
just
Correct.
add
Yeah, please,
one
please
point.
go ahead.
I think the other Sid mentioned a very good point. I think what comes even before that, and we've seen this, we've got a few corporate LPs in our fund, both in India and from outside, is how to get startups to even start engaging with corporates, and how to get corporates to start engaging with startups, right? So, because you're on the one hand, you've got this, fast-paced, let's do everything founder mentality. On the other hand, you've got a corporate machinery which you have to navigate through. Oftentimes, it just gets lost well before an acquisition. It just gets lost in a business partnership, and just you're left figuring out what the hell to actually do. But actually, there is interest, right? And so the business teams and the product teams kind of have to make the business cases stick. So I think navigating through that maze itself is sort of the first test. And I think a lot of venture funds have sort of done that with a few corporates who've taken, at least we've done this pretty actively with Cisco and Unilever and ITC, as well as with a few international corporates. And so I think that part will probably need to get worked on first. And I'll also say, I think the PharmEasy acquisition is very interesting. We at first we actually acquired the business of Mom and Me from the Mahindra Group, and we were looking at a very large acquisition of another very large maternity care business, which eventually got bought out by Reliance. I actually think you'll see more and more of this happen. It's happened very, very infrequently. But I think two reasons why it'll happen. One, just the amount of capital that's available. But I think just growth opportunities for startups to be able to jumpstart what they're wanting to build into adjacent businesses, and just the brand that those businesses carry. I mean, the Mom and Me brand gave so much more weightage and credibility to an e-commerce company back in 2015, 2016. It's very hard to imagine that. So I think those are things which will happen more and more so as we go along, while the corporates obviously will take the acquisition out probably more often.
Understood. Venkat, coming to you, startups start very small, seed stage, one founder, two founder, and then build over, the companies as they raise multiple rounds. Does Dell have a program where they can partner across throughout the journey or life cycle of a startup, or more it's focused on large enterprises?
Great. I think we touched upon this in our earlier conversation. And, good that you asked again. So I want to remind that we don't look at one size fits all approach. We work with everybody starting from their very early engagement, early journey through their life cycle. Different means of business engagement models that we bring in, where they can coexist with our business, continue to pay as your grow models. We bring in those from Dell Financials and help assist these companies who are very young and starting early to leverage technology, because that becomes the biggest instrument to reach customers, right, and disrupt markets. So that's one fundamental help. We work very closely with them in consumption models so that they can take their solutions to market easily. Second, we also customize technology adoptions within their companies or within their businesses. What that helps is it kind of standardizes the whole, infrastructure deployment. That's been another area that we've seen adding a lot of value, and this is a journey. So, to sum it up all, we are very excited to partner with young organizations. Of course, we continue our legacy of working with large companies. We continue to do that, but we're very, very excited to work with young and mid-sized scaled organizations. In fact, that's
Gotcha.
been our forte. Yeah. Sorry. And the other point, this is for, I think, the discussion that we were having earlier, and you took those big conglomerates investing into some exciting startups, and it was nice to hear a lot of views. We also believe we are a startup within ourselves. If I were to draw a parallel from that and give a perspective, I think all of these investments are very, very focused towards either penetrating newer markets, creating a disruption, and it is nice to see these companies coming out of their legacy and wanting to look at this new models of operating, serving customers and broadening their customer base, penetrating into markets. I think that is where we will see more of this happening, is something that we believe as we engage with large companies like this, we get to understand that this is something that is seen as future, and you will see more and more of them coming in different ways and forms.
Awesome. So, switching little gears into, we at 100x.vc, while we are a family office owned, putting our own prop capital. We consciously have a thesis where we will invest in female founders, or at least one founder is female. I would like to run through all the uh, panelists, starting with Vikram, in terms of, do you have a specific mandate on female founders? How do you see across female-led startups, right, getting built across? Any portfolio story which you would like to share with female founder running it, and just highlighting on how females are running startups? Vikram?
Yeah, so I mean, to be honest with you, unless maybe a couple of years ago we were not consciously doing that, and very soon we realized. I think when we started thinking of SDG as a lens also for investing, we realized that it's important to have a gender balance. We do have three startups who are led by women entrepreneurs, and they're all actually doing great. In fact, we've now consciously started looking at women founded startups. In fact, I've recently been onboarded as a mentor on a women entrepreneurship platform, and I was quite amazed by the quality of startups which are actually there. And I think, like my daughter, she's like just 21, and then she's actually just started a company, and then I'm seeing more and more women entrepreneurs now coming up, and I think there's an opportunity there for sure for VCs like us.
Awesome. Sid, you want to go next and give your views on gender balance and investing in women-led companies?
Sure. So I don't think we have a thesis, but we've invested 25 or 30% of our capital in successive funds in women founders. It's not because we were thinking male or female. I think it was more we were able to find deals that were in sectors that also had certain female or certain male founders. I think one big deal for us, and maybe it's for others as well, is that we don't go we are biased in the kinds of deals we look for, and a lot of those deals are very male oriented, and so and that's the problem. The starting point is the issue for us. So I think our entire thesis of looking and trying to expand our own understanding of the kinds of industries and the kinds of spaces that we want to invest in leads us in the direction of trying to find transgender women, men, depending on where you look. And so I think we're also trying to kind of understand what's available. I read this interesting article, and I don't know if others had seen this, where they talked about the trolley, putting the wheels on a suitcase. I don't know if you guys have seen. It took 100 years to put wheels on a suitcase because men just didn't think we should have wheels on a suitcase. And women started doing it much before, but we couldn't make it mainstream because it was manly to carry your suitcase. And a woman doesn't travel on her own, and it's manly to carry a woman's suitcase if she's traveling with you. And so how can you put wheels on a suitcase? I think one is founders, but the other is, are there enough women in operations? We have a panel here, and there's not one woman in sight at all. So I think that's not because there are not women available to be on this panel. By the way, they're just not there. So I think we need to recognize at all levels, founders are just one step. So anyway, but I think we're trying to be as inclusive, but we have a long way to go. I'm talking about Lightbox. We have a very long way to go.
No, thank you, Sid. That were very candid and honest way to look at it. Karan, your views on gender diversity?
No, I'd say it's actually very similar. And I think Sid's example of, again, not the point about the panel necessarily, but even in venture, I think we've often lamented the fact that there aren't enough professionals in VC funds, especially at the partner level. Very, very few. And it's not because of a lack of intent. I think there are some structural issues that we all need to deal with. But for us, we are ESG certified, so we did start measuring how gender diversity and gender equality is amongst our portfolio companies, and we're still at that 25-30%. I think ultimately it's not about only wanting to work with female founders, but if you look at the data of work that's been done across the world, generally speaking, having a woman co-founder has led to more success than not for companies across the board. So I think there is a fair amount of truth in the fact that having diversity, not just by virtue of gender, but by virtue of opinions, by virtue of perspective, is very important, both at the VC fund level as well as at the portfolio company level. Of course, if we start looking at investing in, or whenever we have invested in female founding, female-oriented businesses, PopX was a great example, 2 female founders there, right? And the company was acquired by MyGlam last year, and they didn't have a female co-founder, and having Priyanka join them as a co-founder completely changed the way of that business and how it's sort of looking today. There's a lot more to it. I'm not oversimplifying it here, but
Gotcha.
the nature of the business as it sits there also has a large part to play in it. But very interestingly, in some of the more recent enterprise tech companies that we've invested in, I'd say the average of a female co-founder in the co-founding team is closer to 40%. It may even be higher. That is very, very encouraging, because that's honestly the last place most people would expect. And these are young co-founders. I think that's if that continues, that can be a very healthy democratic trend, which if we can also translate on the domestic side of consumer tech and consumer focusing businesses, it will just create for a much more holistic ecosystem.
Understood. Gaurav, what's your view on this gender diversity?
Yeah. So see, at Prime, we don't against very specific mandate as to look only at female founder-oriented companies, right? But having said that, almost more than 15% of our portfolio companies have one founder or CEO as a female, right? And even while looking at deals, right, we don't have any bias in terms of looking at male founder versus female founder. Founder for us is a founder, right? So even from an evaluation or when you're talking to companies, right, we don't let that bias creep in, right? But as Karan and others were mentioning, there's a long way to go more from an ecosystem and a structural point of view, right? And that we're seeing gradually, right? Looking at some data from the deals that we have looked at this year, and the percentage of female founders, or at least one founder in the team being female, is much higher than what it was in 2018 or 19, right? So we are seeing some of those changes happening, more females getting into the startup ecosystem, right? But again, we have a long way to go, both from a startup ecosystem point of view, from a VC ecosystem point of view as well, right?
Anup, your views on the female founder and investing in female-led companies?
So I think pretty much the same, sort of perspective as Sid and Karan. We haven't had the opportunity to see so many women founders as we are seeing today. So we're greatly encouraged by it. I think I can clearly see, just like Vikram mentioned, I can clearly see 3 or 4 companies having female founders. Miss Malini is one of our famous founders, big following out there, right? And more. So I think it's a matter of time before the venture capital funds by themselves, like Karan mentioned, or founders, we will see a kind of rise. And that rise is coming through. We can see more female founders coming through. We can see more female partners coming through in firms rising up, right? Or setting up maybe their own funds. We know of the leading ladies in the venture capital industry who have their own funds. So I think that trend is only going to grow. So we welcome it. We would love to be participating in more and more such trends.
This is heartening. Everyone has a thumbs up on looking and supporting across and taking the woman-led companies and funding them, and including Karan mentioned about having partners at the VC firm level, female partners. So great to hear that. Venkat, coming to you, while we saw across the current trends which were there, that outside of metros also, startups were getting funded and investments were happening. Do you see very similar trend in terms of tech investments going outside of metros, also in smaller towns? And where do you see most of your Dell engagement happening outside of metros?
Yeah, absolutely. It's very relevant. I think the penetration of technology has significantly increased. Biggest driver, we all would agree, is has been the pandemic for whatever reasons. But definitely, I mean, beyond the metro cities today, we see a significant uptick on technology investments. In fact, that's also one of our big focus of our expansion, coverage expansion. We call it a geo expansion in our business. And we see that business scaling very, very fast, which is an indicator that in the tier 2, tier 3 markets, there are a lot who are relying on technologies, coming out with new business ideas, new business models. That's kind of encouraging them to spend more on tech. So we see that pie only growing as over the next 3, 4, 5 years. So that's a very, very interesting space for us. And today we're very happy that we are able to connect with a lot of customers beyond the reach that we have already built our presence in India.
Awesome. Vikram, coming to you, what are your views on the government policies on startups? Do you have any comments on whether government should do anything more, or do you have any ask in terms of how government has been doing across in terms of funding the VC community, funding the VC funds, various new circulars which has been coming across recently? They started, I think, insurance companies to invest into startups. So where do you see the trend of government and legislations going on the VC industry side?
So on the positive side, I think, of course, the government has been, um, you know, creating opportunities for startups and VC funds, and giving a listening ear, listening to all the requirements, asks. And I think over the last, especially 4 or 5 years, we've been very proactively engaged with various departments of the government, either through IBCA or through CII, to other bodies, trying to ask various policy initiatives, including on taxation, on enabling domestic capital. And I think a lot of it has been already at least granted or executed on. For example, as you mentioned, insurance IRDA policies or PFRDA, and there's at least a push from their side to at least try and enable domestic capital. But the challenge which I'm seeing actually on the ground is, the gap is still so large. I mean, we're still very early stages. We need some major push around tax incentives, or even, for example, when you're talking about PFRDA, there's a big disconnect between what is being proposed by the government, and when you go to talk to some of these pension funds, you realize that they're still complaining about there's this issue, that issue, things are not yet fully done, they can't still invest in VC funds. So there is that disconnect. I think it's going to take some time for some of these policy measures to really come into force. Um, and I think, of course, there are some other issues as well in terms of trying to protect the IP to go out of the country. And I think government is trying to do that. Lots of these companies have been trying to go set up outside of India, in Singapore, and other geographies. And I think they are trying to come up with some policies, including what they're trying to do in the Gift City, trying to enable an offshore environment over there, which I think is a very positive move. Overall, I commend what the attitude is, what the intention is, what the direction is. I think it's the execution where we are lacking, and I think that needs a little bit more push to move things faster.
Sure. Anybody else has a view in terms of the government policies, or any ask and the trends of what you are seeing in the Indian government?
Look, I think that we have a ways to go. I think every time a company has to move to Singapore because they get access to things that they don't have access to here is telling. Companies in Singapore don't move to Malaysia because they have more access there. Companies in America aren't locating themselves in India because they have better access in India and having a subsidiary in America. So I think a lot of the press notes that DIPP has come out with, I don't understand them. I don't understand the logic behind them. And I think a lot of it has to do with the fact that there's a mindset in the government that you have to tighten the noose for the worst character, and in that you just can't loosen it for anyone else. And so you have to assume the worst is going to happen and then create the policy around that and just leave it. And I think the country is changing, and you need to kind of move along with the country. So I think half of our companies are Singapore-based companies, and that's so sad. It's not the way it should be. It's not the way it should be.
I have a quick point to add here, right? So, sorry, Sid. Yeah. So saying,
no, that was a dramatic pause, Gaurav. Dramatic pause.
Okay. So leaving aside the regulatory aspect around fund structure, taxes, etc., I just wanted to share some thoughts around government's outlook towards startup. Right, that has changed a lot in the last 5-6 years. Right, there's a lot more positive attitude towards startup. Right, encouraging and fostering innovation. Right, so of course, Startup India was one thing that was started with the bang, and we didn't see the results as we would have expected. So a lot of things still need to be done at ground level. But in terms of governments or government bodies' initiatives towards fostering innovation, right? So government is establishing digital public rails, right? UPI was first. Then they're coming up with national health stack. IRDA is taking up note and fostering innovation in the insurance space, right? So overall, I think the attitude is right in terms of fostering innovation, encouraging startups. But as Vikram and Sid were saying, more on the regulatory aspect, things need to be eased out a lot more than what they are right now.
Gotcha. Any views, Karan, for you from your end?
No, I mean, look, I don't want to repeat everything that others have said. It's right. Ultimately, it's the on-ground action that people will measure by, not just intent. So I think intent is good, but the more we simplify things and not have the values of the past from other industries, perhaps, I think that's ultimately what's good.
Sure. So coming to, at an early stage, we see a lot of the premier institutions, be it IITs, BITS, everybody has got that e-cells, and they are fostering entrepreneurship at college level. Anything which you believe you would want to share across, saying that what more can be done across so that entrepreneurship is fostered at very early stage within the education institutions. I mean, everybody is engaging very early stage startups. Vikram, you have been associated with the alumni, you have been part of it. Any views on that? And I'll go around other panelists in terms of how education institutes can foster entrepreneurship.
So we have actually taken a very conscious, move in this direction. Actually, right from the day we were conceptualized, we said that a significant part of our carry will actually go back as endowment to the IITs and the other institutions to contribute towards building the endowment ecosystem in the country. And that effort led to the formation of India's first endowment fund at IIT Delhi in October 2019. It was launched by the Honorable President of India, Rashtrapati Bhavan. And following that, Ahmedabad has set up its endowment fund, and other IITs and are setting up. So I think, this endowment concept is actually, in our belief, is going to accelerate this growth of innovation and entrepreneurship at grassroots levels. It's already started happening, as we've seen, especially at IIT Delhi. And we are quite excited about it. In fact, we are driven by that passion to give back to the system and then encourage, entrepreneurship and innovation at grassroots levels. So we are working towards it.
Yeah, I think what I'd add to that is two things. One, it requires funds like all of us and many others to work closely with the incubators and e-cells at all of these colleges, not just go to their entrepreneurship day and speak at a panel and say all the right things. I think that we should do in any case, that all of us do. But I think it's to engage with the student body over there, even if it may not result in any investment as such. But I think your overall team, especially because a lot of analysts and associates and even senior people in many VC funds are from a lot of these colleges, and I think what you can give back, certainly if it's not capital, can be time. The other interesting thing I'd say is, which is it's 2 fund old, but it's still more than zero, is how you're looking at the dorm room fund equivalents in India. So there's Campus Fund, there is Grad Capital. I know there's a couple of others in the works. Those are going to create grassroots level change of very early capital infusion into these into companies which are started by founders from these institutes. Could be recent grads, could be grads which are maybe who graduated maybe a couple of years or so. That will actually have a very significant impact on how colleges and innovation that's happening in colleges can go to the next level. And I think it's upon all of us to encourage these guys. I mean, I've spent a lot of time with Campus Fund, but I think it's the more we can do to develop that's effectively how a lot of these companies will end up raising seed capital, Series A capital, and so on. And that's a very, very encouraging thing, which happened because people had the passion to make it, to do something about the fact that this was a completely unaddressed problem, unaddressed challenge.
Understood. Sid, do you have any views on this college and how premier institutions have been doing across? Any more things which we can do?
So there's always more that you can do, and I think a lot of the stuff that's been said will happen. We're very young. The startup ecosystem and founders, and venture capitalists, we're really in our first round of doing things. We're barely 13, 14 years old, and so I think as more and more exits happen, as more and more wealth is created through either ESOPs or whatever equity is either distributed to investors or internally to employees in the companies, I think more will be given back, and I think that's what we've seen in other countries, and more structure will be given. and more entrepreneurs, in fact, more entrepreneurs, I think, than venture capitalists or other investors, will go back and teach and set up chairs and do a lot more of what Vikram has done, at a much larger scale, because they'll do so. There'll be so many more people doing it, and I think it'll happen slowly, but that's okay. I think it needs to happen. It'll happen in its time, and I think I think just knowing some of the people that are out there that are making money, that are speaking, and a lot of this education, by the way, happens on the internet right now. I think Twitter, following the right entrepreneurs on Twitter, is Indian entrepreneurs, is an education in itself. Who I don't know who was saying, maybe Kunal Shah, I don't remember who was saying it, but he was saying that I wish American entrepreneurs would set up a way to talk to Indian entrepreneurs about what they're doing wrong, so that we don't keep making the same mistakes over and over again. I think it was him. I can't remember who it was. And I think the same goes for Indian entrepreneurs and people like us, that we've learned things and we can kind of give back, and it doesn't have to be through institutes. There are many modes of education, which many people on this panel have also funded, actually, that will go back and teach people who want to start their own companies. I think we're very young. We have a ways to go, and I think we will do wonders in.
I mean, just to share across, Sid, we at 100x.vc, we run Entrepreneurship Gurukul, where we do 8 weeks of training free of cost, no equity, nothing, just training. So our first batch, we had 200 entrepreneurs who we are training across. So anyways, Gaurav, any views on at early stage student entrepreneurs? What's your view?
Yeah, so I definitely think that we've seen that in all institutes, everybody setting up their own e-cell, right, in fostering entrepreneurship. But I think as VCs, we need to engage a lot more earlier with them and a lot more continuously, right, rather than, as Karan was mentioning, rather than just going on their demo days or going just for a speech or a talk. We need to engage with them even earlier, and that engagement needs to be of a more continuous nature, right? Because a lot of innovative ideas, it all boils down to execution, and that is where I see there is a lot of gap in terms of from idea to execution, at least at the college level entrepreneurship. The second thing I was thinking more from the academic and the curriculum point of view, right? When I was back in B school, most of the content and curriculum in B school were tailored around traditional businesses that have been there around for 30, 40, 50, 60 years, right? And now we have a lot of new types of businesses, new case studies coming up, which can be made around new age startups in India or around the globe, right? So even from the content and curriculum point of view, I think things need to change a bit, where it has to be tailored more towards the new age economy, new age companies, more around tech and product companies and things like that. So that'd be the other thing which I think a change there would definitely foster entrepreneurship at a much more level at colleges.
Sure. Venkat, does Dell work across with education institution at early stage, or e-cells, or colleges at early?
Absolutely, that's a big area of focus for us. Besides health tech and we spoke about startups. So we work through the student faculty life cycle, help them go through research, go through online, and go through several areas of technology needs today. So that's a big space. Very specific to education institution, entrepreneurship is big there. We all know that, right? Students contribute in a big way. Uh, Happy to share that Dell has set up a platform for Dell for entrepreneurs. What we say is through your life cycle, you can start working with our experts, our advisory consultants in help planning your IT resources. From a single small computer to the entire enterprise solution, we can do everything. What this allows is it kind of allows flexibility, not to keep switching from company to company, dealing with several partners. You can just work with one who can do from a small scratch to everything until your journey. And in my conversation earlier, I talked about financial resources, right? Startups and all these new age entrepreneurs looks at conserving capital. That's where we bring in the Dell Financial Services, help them go through those on a paper, use model or pay as you grow models. That also gives them that life cycle access of preserving capital yet get the best, and in the process serve their customers or serve their research better. So a lot around mentorship, a lot around engaging with best practices, allowing our R&D lab accesses to students, to entrepreneurs is a big thing that we do in India and of course in a global scale in a very very big way.
Awesome. Any closing comments, Venkat, while we wrap up the discussion? Any closing comments for startup entrepreneurs, VCs, how they should work and engage with Dell?
Yeah, I think it goes without saying that technology becomes a sticky glue, and therefore we would like to partner more with all the VCs and more entrepreneurs, and in helping them foster their journey of innovation, speed to market, looking at timelines, crunching timelines, and of course the talent pool, building talent pool. All of this can happen with best technology support, and I think Dell is committed in this space. I personally believe that having run this now with startups for the last 3 4 years, this is a space that is only getting better and better. We are making investments, and we're committed to make more investments. Just one thing that I want to call out here, which is very unique. We have appointed IT advisors for each startup, a single point of contact for all the startup or entrepreneurs saying, hey, here is a Dell advisor who can help you consult on technology, can be an advisor on how you have to prepare your roadmap and so on and so forth. That's an unheard of investment from a business perspective, right? So we're doing that, and we will continue to do more and more of that.
Okay, awesome. Gaurav, closing comments from your end. Any one advice which you want to leave with to startup? What should they look out for? What's your?
I think I tell this to all the entrepreneurs and people in my network. This is the best time to be an entrepreneur in India. Right? Last year was all about laying the foundation. The last decade was all about laying the foundation. I think this decade is all about scaling it up, and taking it to the next level. And I say it for two reasons. One, there's a lot more liquidity in the market for early stage investment. Right, there's one gap which is there in very early stage investment, and there people like you, Sanjay, who are trying to address that gap, and we're seeing a lot more activity in the very early stage institutional investing side of things. Right, and again, we are seeing a lot of action happening in the late stage as well. Right, so in terms of fundraising and VC activity, I think we are in middle of a lot of action going on around, right? So that is one. Second, what has happened over the last year and a half is now the world is your playground, right? You're not limited by geographical boundaries. People are living on the internet right now, right? So sitting out of India can build for the world, right? Which people used to say earlier, but it was easier said than done. Right now, I'm seeing a lot of people sitting out of India building for the world, right? And that will happen. That trend has only accelerated in the last 1.5 years. Right? So my advice for entrepreneurs would be: this is the best time to be an entrepreneur. Given a chance, think of building for the world from India. The world is a playground now.
And lastly, while we wrap up, if an entrepreneur has to reach out to Prime Ventures, what is the best way to reach out?
So the best way to reach out to us is you can mail to any of us, to any of the partners or myself, and our email ID is firstname@primevp.in. That is the easiest way to reach out. And typically, I say again this to all the entrepreneurs: if you know somebody who can introduce you to us, nothing better than that, because a referral definitely goes on top of the stack in terms of the evaluation process.
Awesome, thank you, Karan. Closing comments from your end. What should be the future outlook? One advice you want to give to entrepreneurs, and if they have to reach out to Chirate, how do they reach out?
So I'll answer the last part of that question. Is the same. I think reach out to us over email, reach out to us through people you know. Our emails are all just firstname@chirate.com. Over and above, I think everything else in a market like this where you have a lot more options as a founder, I think, than one did previously, which is actually very, very, very heartening. The one thing, at least when I talk to founders who we've already invested in, is keep your eye on the long-term game. And this is one of the things that one of the founders I work with, this is Vivek, who's the founder at Bounce. He says, think of building a 100-year company. Because if you build with that mentality, you will build very differently as opposed to building from Series A to Series B to Series C. It's very easy to say these intellectual statements, but ultimately there's a great deal of truth to that, right? Sometimes you can't think like that, so you have to think more tactically. But if you're truly building a first principles based company, and capital is available, that's the best approach, because everybody will go through their ups and downs. It's a given. I'm not saying it's all one ride upwards, but ultimately you'll start building something of value which goes beyond just what the valuation is, how much you raised, etc., etc. I think those are the companies anybody would like to invest in, anybody would like to work at, anybody would like to be a part of.
Got you. Sid, your closing comments, advice for entrepreneurs, and if they have to reach out to Lightbox, how would they reach out?
They have to reach out to Lightbox. We have to pitch at least. I think we have a link on our website called Pitch Us, and they fill that out. It actually goes to everyone on an app, so the entire fund sees it rather than, I guess, the one person that they reach out to. So that's probably the best way. I love this advice sessions are good. I couldn't think of anything top my head. I remembered a story someone told me, and I think it reflects well for us to kind of consider as, we start getting all this noticeability for startups and founders and entrepreneurs. Everyone isn't designed to be an entrepreneur, and startups don't succeed or fail because of one person. Some people are designed to be the head of operations. Some people are designed to be the head of product. Some people are designed to be the head of engineering, and so on and so forth. I think it's important to know what you're designed to be before you just go in a certain direction. And everyone is important. And so, but I don't think that's advice. It's more someone gave me that advice, and so I'm passing it on.
Okay, cool. Awesome. Thanks, Sid. Vikram, coming to you, closing comments last, and any advice for startup entrepreneurs, and if they have to reach out to IVCap, how do they reach out?
It's very similar. We are the first name at ivcapventures.com. And of course, we also have a link on our website as well, where they can even connect on LinkedIn. Now, I think most of the advice has been already covered, but I just focus on entrepreneurship is a very hard journey, can get very frustrating, especially early days. Early days are much more tougher than once you raise some capital. I think it's very easy to give up and think that maybe this is not for you. But if you believe in what you're doing, if you're passionate about solving the problem you're trying to solve, I think you just have to keep working at it. And there are quite a few examples. Infosys is one great example. It actually went around trying to raise funds for a long time and got lots of rejects at the beginning. There's hardly anyone willing to fund them. Robinhood is another example, had 72 rejects before they got their first check. There are quite a few examples like those where things can be very frustrating when people start saying no to you. But if you believe in yourself, just keep going and you'll get there. So I think that's my advice to entrepreneurs who are really out there trying to make a difference.
So rightly said, Vikram, and thank you all of you.